Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because I'm watching so many investors make the exact same mistakes I did when I first entered this market. And we know that when it comes to investing, the best opportunities to sell are usually during extreme greed, yet most investors FOMO buy instead. And the best opportunities to buy are usually during extreme fear, but most investors panic sell instead. And I don't think this time is any different. We all know the famous Warren Buffett quote, be fearful when others are greedy and be greedy when others are fearful. And of course, this makes so much sense. We want to buy things when they're at a discount and perhaps we want to sell them when they're at a premium. But in reality, very few people actually do this. When sentiment is extremely greedy and investors are convinced that we're going to get a Bitcoin strategic reserve and a golden age of crypto, everybody piles in at very high prices, just like they did last year when the ETFs were buying a bunch of Bitcoin and people were coming out of the woodwork with 200K, 300K Bitcoin price targets. And now we have investors super fearful because of trade wars, because of recession, because of selling, just like they were terrified in August of last year because of the Japanese yen carry trade implosion and we're entering a bear market and it's all over. And in 2023, the SEC went after Coinbase and everybody was convinced this industry was done for and nobody was interested in buying the dip. And there's really one main reason why this happens, and that's narratives and what they do to investor emotions. I've been getting so many questions about the Bitcoin death cross that just happened. Is this the end? Are we entering a bear market? Is it all over? And I'll never forget the first time I heard about the death cross when I first joined this market. And it sounds like this very reliable thing that means that Bitcoin is going to go a lot lower. I mean, it's literally called the death cross. But if we just take a step back and look at the data, we'll notice that Bitcoin has had a death cross every single year over the past 7 years. And a death cross is just a 50-day moving average on an asset crossing below its 200-day moving average. And the first thing you'll notice is we've had two already this cycle, and both of them were at the exact local bottom of that correction. And what do you know? They also aligned perfectly with the lowest reading we had during that correction on the Fear and Greed Index in both August of last year and September of 2023. So these death crosses tend to happen when sentiment is already so fearful and the correction has already occurred, and they usually result in the final capitulation before price reverses. And now I know what you're thinking. Yeah, it's great that the death cross marked the local bottom in 2024 and in 2023, but look at what happened in 2022. Look at what happened in 2018. And don't tell me that was just because those were bear market years. This time is different because of recession, because of trade wars, because of Fed quantitative tightening. This death cross is definitely the sign that Bitcoin is going to roll over. But aside from just seasonality and bear market years, there's actually something that these two death crosses have in common that all of these other bullish ones don't have. And it's something that we talk about very, very often on this channel. And that, of course, is global liquidity and the business cycle. So you can see something very clearly once we add global liquidity to this chart. In 2018, global liquidity was going down for almost an entire year. And what do you know? Bitcoin had a death cross and entered a bear market. In 2022, we saw a huge decrease in global liquidity. And what do you know? Bitcoin entered a bear market and went down quite a bit as well after its death cross. But if you look at all the other cases that I have marked out in green, it was completely different. In 2019, global liquidity was rising and so did Bitcoin. In 2020, global liquidity skyrocketed and so did Bitcoin. In 2021, global liquidity was still going up and so did Bitcoin. In 2023, global liquidity rallied and Bitcoin followed. Same thing in 2024, global liquidity rally and Bitcoin followed. And here we are once again in 2025, global liquidity has been rising. Bitcoin had a correction and just had its death cross. And I believe Bitcoin is going to follow global liquidity once again. And this isn't something you just have to look at charts to rely on. We see it very clearly in the directional alignment and correlation data. Bitcoin is the most correlated asset in the world with global liquidity. Here we can see the directional alignment over 12 months with Bitcoin was 83%. The S&P 500 was quite close at 81%. The world total stock market index was okay at 72%. Gold was 68, which makes sense because investors do use gold as a currency debasement hedge historically. Emerging markets a little bit lower at 60%, and bonds are closer to 45%. So Bitcoin is very correlated with global liquidity, and that makes a lot of sense because Bitcoin doesn't have to worry about earnings. Bitcoin doesn't have to worry about tariffs. It's a fixed supply risk asset that can protect you from currency debasement because there aren't any more getting created, and we know what the supply is going to be going into the future. So while everybody is panic selling because of all of these clickbait headlines about death cross this, death cross that, we know that death crosses have been bearish for Bitcoin during global liquidity downtrends, but during global liquidity uptrends, death crosses have just marked the end of a consolidation for Bitcoin and actually meant that Bitcoin was finishing up its correction and getting ready for its next rally because global liquidity tends to lead it. And speaking of global liquidity, just last week we had it make a new all-time high for the first time since 2022. And it's incredible that Bitcoin was able to have an entire bull market from 15K all the way to 109,000, while global liquidity was essentially consolidating sideways for the past 3 years. And now that it has finally broken out and entered new all-time highs on this global liquidity index, I think it's only a matter of time before Bitcoin follows as well. And just because I always get questions of what's included in this metric, it includes the Fed balance sheet, it includes the Treasury general account, reverse repo, a bunch of the major central bank balance sheets around the world, and all the major money supplies around the world. So it takes in a lot of things into account. Besides just global M2, it also includes Fed balance sheets as well and the US Treasury. And now we're finally seeing this metric break out and make new highs for the first time since 2022. This is why I called Monday's free weekly report that I always link below the liquidity tsunami, because we've had this entire bull market so far without even having a breakout on global liquidity. And now that it has, I think it's only going to continue increasing over the next few months. And that makes me quite comfortable with my existing holdings. I didn't make any changes to my portfolio this week. The dip buy that we had last week did end up being quite successful. And now my system is telling me to just sit on my hands because my cash position is close to my 30% target. And if you want to learn about my portfolio system in a more structured way, I'm still offering lifetime access with early bird pricing on the Crypto and Macro Enjoyers program while I finish up this final module. But it is so much easier to manage emotions and make good decisions when you actually have a plan and system in place and aren't just reacting to headlines or the latest news story, or Trump is implementing tariffs on this or removing tariffs on that, or pausing tariffs for here or adding tariffs for there. It is very difficult to make good investment decisions reacting to the ever-changing headline and narrative landscape, so having a plan helps quite a bit. And even though we've seen all of this macro uncertainty, it's incredible how well Bitcoin has held up throughout this entire S&P 500 sell-off. I've been pointing out this relative strength for a few weeks now, and people just keep saying famous last words, just you wait, oh, it's only a matter of time. But the S&P 500 sell-off essentially happened 2 weeks ago, and we haven't seen Bitcoin follow through. Now, of course, if the S&P 500 falls off a cliff, it's going to drag Bitcoin down with it. But now that we're about 2 weeks removed from that 20% correction, I think we can conclude that Bitcoin did something this time around that it's never done before during an S&P 500 crash. I also find it incredibly promising that we didn't see huge ETF outflows, especially when compared to the inflows we saw in 2024. I was sure that ETFs would further increase Bitcoin's correlation with the S&P 500. And yes, there was some selling over the past few weeks, but compared to what it could have been with the 20% crash we saw in the S&P, I really am impressed with how resilient these ETF holders have been. So we'll see what happens. Could Bitcoin still go to the low 60,000s? Of course it could if there was some terrible thing that happened in macro or something breaking in the economy, anything is possible, but I do still believe it's unlikely based on current sentiment and current price structure. And I prefer to manage my portfolio based on probabilistic outcomes and not just going all in on one outcome and selling everything here so I can buy back everything here and then try to sell everything up here, because there's just so many things that can go wrong with that strategy, no matter how good it sounds on paper. And I consider Bitcoin's current price to be fair value for somebody with a longer time horizon. Will we get a chance to buy Bitcoin in the cheap region this year? I'm not quite sure. Will we get a chance to take some profits in the expensive or very expensive regions? That is my base case for those of us that want to do that, but we have to be prepared for the scenario that we end up seeing the cheap region first or end up seeing the expensive region first, and not just be all in or out of the market because of what we hope is going to happen. And although there's always a chance, no matter how small, of the cycle being over, we're still above my invalidation, which is the 50-week moving average. So my base case is that we still have higher prices to go, especially with what we've seen with global liquidity. And being open to multiple cycle outcomes makes it a lot easier to make good decisions and manage our portfolios. And right now you kind of have this tug of war between the bears saying that this trade war is going to break and ruin everything, and there's no way markets can go higher from here, and the bulls pointing to M2 and global liquidity saying, hey, Bitcoin is a currency debasement hedge and risk assets tend to do well when the money supply is increasing and the fiat currency is being debased, and we're going to see who ends up being right. But you guys know that I am in the global liquidity camp, and I believe it's only a matter of time before Bitcoin follows global liquidity, now that we've seen this major breakout that started last week. And we know this major drop in the US dollar index is good for global liquidity as well, because it makes US based debt around the world easier to pay back and also improves global trade. Yes, I know tariffs are putting a wrench in that, but I do think this too shall pass. And this drop we've seen in the dollar index is quite bullish for Bitcoin, especially because the market is pricing in more and more Fed rate cuts now that we have inflation falling off a cliff, and our leading indicator Trueflation says that it's likely going to keep going down. We have a weakening labor market, which is going to give the Fed room to cut, but we don't have a collapsing labor market like the dot-com bubble or like 2008. And we have an aggressive sell-off in the S&P 500, which is allowing the market to price in more rate cuts and is going to put downward pressure on inflation and spending, because investors are watching their portfolio values go down. And it's also going to result in more labor market weakness as well, which should result in the Fed having more room to ease with falling inflation and a weakening labor market. So we'll see what happens. For now, this is just more consolidation and chop for Bitcoin. Lose the March high and we can talk about bear markets and panic, reclaim the previous range low and the 20-week moving average, and we can talk about bull market is back on. Let's take off. As for other assets like Ethereum, nice reclaim of its old range mid after that liquidation below the previous swing lows. We just really want to see it maintain above that level now. Similar thing for Solana. Strong bounce off the 200-week moving average we were watching, reclaimed its previous range low, and if it can maintain above that level, our next target would be the range mid and range high, as long as we're able to maintain that range low reclaim. But of course, a lot of Ethereum and Solana's price action is going to rely on what Bitcoin does in this range. Reclaim the range high and altcoins probably do well, lose the range low and altcoins probably get obliterated. So we're going to have to wait and see what direction Bitcoin picks. But as we look forward, the federal government is still running huge deficits, $1.3 trillion as of right now for the fiscal year of 2025. We are still 23% ahead of the same time period for the previous fiscal year, and this deficit trend is only worsening. We'll see if Doge is able to do something about it, but I'm sure that as soon as something breaks, all of the cost-cutting ideas are going to go right out the window, because nobody wants to sit through economic pain when they can just print money instead. And because of this trend of exponential debt growth and exponential money supply growth, I expect risk assets like the S&P 500 to perform well, and I expect fixed supply risk assets like Bitcoin to perform well also, especially because of what we've been seeing with M2 and global liquidity. But as always, let me know what you expect. Will Bitcoin revisit the low 60,000s, or is the low gonna be in the mid 70,000s like we've seen so far? And let me know what you think about this death cross chart. Is this gonna be a local low of a consolidation like 2024 and 2023, or is this gonna be the start of a bear market like 2022 and 2018? But as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.